Welcome to the KIS Investing Presidential Trade of the Week. This week I want to place a little more advanced trade. A lot of you on YouTube, by the way, thank you very much for all your comments, have been asking me to do a little more exciting, more interesting, more higher IQ, financial IQ trade. So today I decided to do a Straddle Strangle Swap. So let me explain. I want to buy something that will make money if we have a huge move after the presidential election. What I've noticed on Fed days and on big events is that we have huge moves, sometimes up, sometimes down. I don't know if it's going to go up. I don't know if it's going to go down. But what I'm sure it's going to move, and it's going to move a lot. So what's the best trade to buy if it's going to move a lot? So the best trade to buy would be, of course, a straddle or a strangle. Now, that is a terrible mathematical trade, a trade that, for example, Tom Sosnoff would not like me to put on. So what should we do if we are expecting a big move during the elections, but we don't want to spend a lot of money buying long Vega, long options? So what I plan to do is sell the meat, which is selling the straddle, and then buying the strangle on a further out expiration. I want to finance my long options with the meat. So without further ado, if you want to learn how to put on this trade using our trusty tastyworks platform, get ready, fasten your seatbelts, and here we go to the trade of the week. Welcome everyone. So here we are. Let's set up our trade. Let's take a look first when the election is supposed to happen. The election is supposed to take place on November the 3rd. November the 3rd is where we want to be long our strangle or our straddle. So what should I do? First, I want to go out 1 week to November 9, and I want to buy some options. I know this is a bad mathematical trade, but bear with me. So I want to buy the 315 put, and I also want to buy the 350 call. Because if we buy closer at the money options, this trade is going to be very, very expensive. You know, right now the S&P is trading around 333. So this is the trade, and we're looking around 6 to 4, about $10 or $11 to purchase these two options. And this trade would have a very, very low probability of success. So this is a terrible trade. Now, how do we finance these two long options? Well, what we're going to do is we're going to go to 1 day before the election on November the 2nd. And what are we going to do? We're going to do something that's called selling the meat. What? Yes, Tony, selling the meat. And what do I mean by selling the meat? Which are the most expensive options normally? Normally, the most expensive options are the ones that are right at the money. And since S&P, the spiders are trading at 333, I want to sell the 332 put, and I also want to sell the 334 call, giving us about a credit of around $17 or $17.50. Now, if we combine this meat with our long options, we see that we are getting a credit for this trade, a credit of $7.46. Now, what would be the ideal scenario for us? The ideal scenario would be for the spiders to keep trading within this range all the way to November 2nd. Then these two options expire, and we are able to keep on our long options for free. And then if we have a huge up move and a huge down move, then we will probably make a lot of dinero. Mucho dinero, amigos. And let's take a look right now at the Greeks. Now, to put up this trade, you will require a buying power of around $950. And this trade is actually pretty neutral. It has a -3 delta, but it has a +3 theta. Also, the probability of profit of this very neutral, very conservative trade is around 57%, which is a tasty trade, mathematically correct trade that we want to put on. Now, hey Tony, how much money can I make? This type of trade is very difficult to know how much money you're going to make or how much money you're going to lose, because it's a calendar. And a calendar is when we introduce options in two different expirations that, they work with each other very, very differently. Let's take a look at this trade graphically. First, let's take a look at the short options, at the meat, the ones who are going to finance our long strangle. So the meat here, we're selling the 332 put, November 2nd, and we are selling the 334 call also in November 2nd. And that's a lot of meat. And now we're going to buy the 315 put for a week after the election and the 350 call for the week after the election. There's a big probability that this trade will be profitable in the next 10, 12, or 14 days. And then you can decide if you want to take it off for a profit or leave it on as a lottery ticket just in case we see a huge move, which I'm expecting after the election. Either way, either President Trump gets reelected or Biden becomes our new president. So there you have it, guys. If you want to use options in a very clever, very ingenious way, you want to finance these two long options, do it by selling the meat, and sell the meat before the event, before the big event, which is going to be November the 3rd. Thank you very much for watching the presidential trade of the week, where we're hoping for a big up move or a big down move. And let's see what happens. It's sure going to be very, very interesting. As this morning, President Trump supposedly was feeling much, much better, which is good news. If you want to trade using the best trading platform, which I used for this video, click on the link below and open your tastyworks account right now. And remember, you gotta risk it to get the biscuit. Good luck trading, everyone. Tony out.